Toronto home prices have dropped to pre-pandemic levels like 2 years ago. Is this true? That's the first headline that we'll be covering on this week's reaction video. The next will be Canada real estate is proving to be a story of excess demand according to Bank of Montreal. And then the third article we got, everyone's favorite headlines. Bank of Canada's Tiff Macklem says job not done despite cooler inflation. What he's referring to is the fact that the CPI is coming down, but he's still going to continue to hike rates. And then the last one is everyone that's freaking out about real estate prices. Blackstone is preparing a $50 billion vehicle to scoop up real estate on the downturn. And all of this we'll be covering in today's episode on the reaction video. Now, if you are looking for some help in the real estate market, whether you're buying, selling, or investing, a lot of people have been calling me because they've been gearing up because we do expect a 6 to 8 week of activity from September after Labor Day until call it like mid-October or so, a little bit after Thanksgiving long weekend. And that's kind of when the last little leg of the real estate market's going to kind of kick it into what is overdrive or what's remaining of the year before we all really dwindle down in the November and December months. So if you are looking for help on how to navigate this coming 6 to 8 weeks, you can book a call with me using the link on the screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I own and operate a RE/MAX in the Greater Toronto Area, on top of making awesome real estate content just like this. And the first headline we're going to be discussing today is Toronto home prices have dropped to pre-pandemic levels. So the first thing I'm highlighting right now is after months of decline, the price of a detached home in Toronto is now essentially on par with pre-pandemic prices. Yeah, it is. It is true, but it's cherry picking a stat to get a headline. And this is why you really got to read the body of this. And Stories puts up great content, but sometimes even in like slow news cycles, and I'm even having a hard time looking for articles to kind of talk about. You're trying to fabricate stuff. And this is kind of where we're getting to in those dog days of summer. So when you look here, it says that the median price for a Toronto home has dropped to essentially $1.3 million in July, which is last month, which is only $50,000 difference of the $1.23 million as seen in February 2020, which was before the pandemic. So therefore, it is essentially close, which is what the words right here, essentially on par. So obviously I did a little bit of digging because I'm like, this doesn't make any sense. So here you go. If anyone is curious, here is the detached numbers from my charts. And you can see that the only where that's kind of remotely close, because prices did come down like 20% from the peak, we're at 1.5 million on average, right? Keep in mind, this is the average price to get to about close to your like June 2020, right? In May 2020, you're less, right? So that's where I'm like, you're essentially close. But a lot of people argue we should use median or average. And I generally like to use average, even though it skews a lot of the larger stuff. But it's the larger properties that generally do end up selling in Toronto, because most people who are looking in Toronto are looking like close to subway in the core, right? So that's why the median always trails behind. And the median is just the middle number. So it really just depends on what kind of property you're looking for, right? Because obviously a house in Scarborough is different from a house in, say, like the east side of the Don Valley, right? Say Plater Estates or Riverdale, or it's different from Ronsonville, right? Or if you go to like Cliff Smith Rocks, right? It's totally different. So that's why I would use the average in this case, as long as the sample size is large enough. Now, obviously I'm not gonna like go busting on their headlines. So I did pull out the median price, and you can see right here, it is correct, right? So you're at 1.25 mil back in, back in 2020 in February, and you're at like 1.285 currently at the end of, July. So it's more or less the same, but it's not so much where it's on par, essentially the same thing. You're not going to be able to buy like, say, a midtown kind of semi for this, or sorry, detached for the same price I was back in February. It's not. That's just not it. So you got to watch the headlines you're kind of putting out there. But one of the things that I wanted to note is that the median price in July for cities' low-rise homes, which means freeholds, not counting condos, includes everything from detached semis and rows, and they are lower than what they have been for a lot of home prices. So when you get the average of all of those freeholds, it is lower. And the crazy thing is like, it looks like it's really cheap right now because during the pandemic, everyone flocked to the suburbs and the prices for Toronto stayed the same, just it never went up. But we always thought, or everybody always thought, that Toronto will remain kind of hot when the reurbanization is happening, which is happening right now. But because of interest rates, all the prices are coming down and they're taking the similar or almost on par beating as the suburbs. But because the suburbs have went up like quite a lot, there's some places that have almost doubled, then you're looking at Toronto not increasing much, but they're also dropping by 20% on the average in GTA. This is why you're seeing a parity on prices right now relative to, say, something similar that you're buying on average back in the pandemic days, right? So that's where you have to understand what's happening. And you can see that this was saying that areas that saw a jump of 70-75% 2 years ago, which is a city, whereas the city of Toronto only went up 30%. There's a delta, because when you come down 20% from 70-75%, you still got room. But when you come down 20% to 30%, you're going to get back to where it was around the pandemic. So that's kind of where Toronto's underperforming right now. So saying that Toronto's kind of safe from all the prices coming down, it's not. But it's not going to necessarily be that way soon, because right now we're comparing these very, very slow months of summer. And I have a video coming on that on Thursday. Basically, a lot of the bigger freehold homes, they don't come on the market. So they're detaches, they don't come on the market unless it's spring or fall time. So we've only really been selling a lot of like lower price point condos, and that's going to skew most of the numbers down. But once we get to the fall market come end of September, like I was saying, I'm pretty sure we're going to see a month-over-month increase from August to September. And that's when all like the big boy properties are going to come out. And that's where that 6 to 8 week of activity is going to happen, because freeholds move with the season, real estate season, and also like school season, but the condos generally do not. And the last thing I kind of want to highlight for you is everyone's trying to get an idea of what's happening in September, which is what the Thursday video is going to be about. But no one really knows, right? And I do like this quote here. It says, the most likely path is either prices continue to drop, probably at a lower rate, but not as rapid as we've seen, or they stabilize. And I tend to agree with John Pasalis on this one, where get a slight increase in kind of activity. It will look like what we call a bull trap, or like the sentiments changed a little bit, but there's so many things that's moving with like interest rates going up still. And we don't know how many buyers are coming on the market versus how many sellers are coming on the market, right? And I've been taking a lot of calls recently. Half of them have been about kind of like the distressedness of the condo market, which is like a pre-con side. And the other side is a lot of buyers are looking to buy. The problem is like I'm still getting people calling me about selling the property, but not as much as those two other ones, right? And obviously this is just a very low sample size just for myself. But I personally think that we're gonna have a pretty balanced, I would say, fall market, meaning that prices could probably stabilize and not decrease as rapidly, like what John was saying, or we'll probably see a little bump up in September, because month to month, August to September, it generally goes up, except for like, I think one time in the last 22 years, which I talked about in a previous video. And after that, we may see a little bit of like a reversion back to continue slowly going down, right? Because you're going to get that bump and then you're going to come back down, because there's a lot of activity gets jammed into September and October. And then when we go to the latter half of the slower season in the real estate, that's probably when prices are going to be lower, similar to what we just saw in July and August. And when August numbers do come out, it's going to suck. It's going to suck, but there will be a surprise. But I'll tell you more on Thursday's episode. So the next article we got here is Canadian real estate is proving to be a store of excess demand, according to BMO. Great headline. Most of the bad dwelling stuff is a little bit more in the bearish case, but they do put out really good articles. The most important thing I kind of want to show you is this chart that they have here, which I'm going to illustrate with this quote for us. If there was any doubt that the pandemic boom was a demand side phenomenon, meaning that there was a lot more people buying than there were a lot selling, and it's being due to the fact that interest rates were lower, this chart illustrates it clearly. And you notice at one point, which is right here that I've highlighted, that they're more than 50% the average 10 years, right? Which is a 200-day rolling or 120-month rolling average right here. So you can see that demand does start to pick up right here. And that's kind of where the pandemic started, right? We, on average is kind of pretty flatline for the last 10 years. And it went up, and that's mainly because interest rates. So that's why everyone's kind of been focusing on, interest rates and inflation, because a lot of people who are hoping to kind of maybe as an investor continue buying, they want the interest rates to come back down so that prices go up and the carrying cost goes lower. For like end users, it's kind of the same thing, because as prices go up, your interest rates go down, your monthly payment's still the same, because that's what most people care about. And that's why a lot of the people looking right now are end users. But you really have to understand that if we continue keeping these rates around this 5%, that's why I was saying earlier in the previous article, we'll probably see a slow decline in pricing, because I don't think our real estate market, especially in Toronto, that's like leveraged and highly leveraged, right, can sustain such high interest rate. And when come September 7th, when the interest rate hike probably happens, another 50 or 75 bips, we're going to bring the variable to about 5% very soon. So when your variable and fixed is at 5%, we can't sustain much of these interest rates because the prices are high. So that's why if you see interest rates start coming down, there could very much be a run up in price because, again, interest rates, as you could tell in this chart, provides excess demand on the demand side. So the only way you're going to have excess demand outside of that is maybe the monthly payments change, like I've been talking about before, where you increase the amortization or you reduce the stress test. And this is all kind of government controlled, and it's all going to be dependent on inflation and also how much of a damage they want to put into the economy for real estate if it is such a big component of the GDP, right? So these are things you have to understand and why so many people are so focused on the interest rate right now and inflation. It's mainly because of this. It's all one big giant trade because everything else is not doing that great either. Now, if you found this content useful, I'm sure someone else would, so make sure you help us spread the knowledge out there by smashing the like button and subscribing to the Prime Preps channel, because every single week we make awesome content like this so that we can share with you what the heck is actually happening right now. And if you are trying to ramp up and transact in the next, call it 6 to 8 months, where activity does kind of increase for the last little bit of 2022, you can book a call with me using the link right here at www.chatwithzen.com. So that's whether you're buying, selling, or investing, we can kind of guide you in the right way. I would say most of the active people who are looking to buy right now would probably be end users, and most of the people who are actively looking to sell right now will be people who kind of waited for maybe potentially a better market, because you are going to get that uptick in September in terms of pricing and activity and buyer demand. But like I was saying, again, the question is we don't know how much on both sides, and we'll find out very soon in like 2 or 3 weeks, right? Then the next article we got here, which is kind of piggybacking off of the last article, which is about inflation and interest rates. Bank of Canada's Macklem says job not done despite cooler inflation. So last week they came out with inflation numbers, and while core CPI went up, the percentage that the inflation came in at was a little bit less than what most people were expecting and lower than the previous month, meaning that potentially, and I've been saying this a lot, 1 month doesn't mean a trend, but a trend does start with 1 month. So you can kind of see that while the CPI is coming down, a lot of people are celebrating, but it's still quite elevated. And he wants to make sure that it's very important you understand, we know our job is not done. It will be done until inflation gets back to the 2% target. So he's very much blatantly saying like what they're trying to get us to do. If inflation becomes 2%, and I've been talking about this before, it doesn't mean that things become cheaper. It just means that things become less expensive as quickly, meaning that instead of going up 7 or 8% year over year, it's going up 2%, right? So we have kind of maybe potentially reached the top, and it will slowly come down just because it's hard to do a compounded year over year growth. So maybe they may slow down, but they are very adamantly saying that they are going to increase interest rates. So that's what I'm saying. We're probably going to go in September, and then the next hike meeting is in October 12th, I think. Don't quote me on that, but it's like somewhere in October. They take November off, and then usually December, nothing happens because everyone's the holidays, but there is an announcement date there. So a lot of people are saying we may get 50 or 75 bips in September, and then we may get another 50 or 75 in October, depending on where the inflation print is. So that's why everyone's kind of following this kind of inflation and CPI stuff. But what you have to understand is that the fixed is getting very, very close to the variable. And I think come September, October, they may be exactly the same. And that's when it'll be interesting for a lot of people, depending on what their strategy is of real estate. If you're holding it and you're afraid of inflation and interest rates going up, you may lock in. But if you think that the fixed rate's going to come down, the variable is going to come down because of recession, then you may hold a variable. And that's going to be a discussion when we see what happens come like, say, mid-September or October. Right? And then we got the last article here. Blackstone is preparing for a record $50 billion vehicle to scoop up real estate bargains during downturn. So before everybody freaks out or people kind of say, oh, look, Blackstone is going to backstop this. You have to understand that they're doing this in the US. I think Blackstone came up saying that they're not interested in looking at residential real estate in Canada, which means the single family homes that you and I are probably talking about right now. And the main reason is Blackstone is chasing something called yield, meaning that they want a percentage of a return being paid out to you on a whatever annual basis based on the amount of money they invest, because Blackstone's not buying these things with leverage, they're just buying this cash. And the cap rates right now in Toronto are like 2 to 3%. When you go a little bit further, they're maybe 4 or 5%. So they're not very, very good right now, and there's not much upside. So that's why Blackstone's not going to get into the market. But if you go into like different states, I'm sure it's different there. So while some people want to say, hey, look, either you rent from Blackstone or you rent from mom and pop landlord, you have to understand that I don't think Blackstone is going to be a big player in the residential real estate space, at least in the golden horseshoe. So nobody freak out about this, or nobody talk about how, oh, prices are going to go up because Blackstone's buying this. And there's probably a lot more like analysis that they are doing more so than all of us, because they're one of the world's largest hedge funds, right? So that's kind of a wrap for all the articles I got for you today. Hope you guys are enjoying the last bit of your summer. And if you are looking to kind of ramp up to transact in real estate come September, generally it's after Labor Day, you can book a strategy call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.